Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a crypto highlight video. And if you're interested in any of the services I provide, please check out the links in the description below for the Patreon and Discord. Okay, guys, so I was asked to essentially look at Hook. I've never even heard of this thing, and I see why. It's extremely new, it looks like. I'm looking at the Hook on the Binance Tether chart, and yeah, so I'm not really sure what this is, but it was asked of me by a member, so I have to look at it. Monthly, obviously, there's no information here. It looks like just a stick. So let's go down to the weekly, which I know will not have enough information here. Let's go down to the daily, which will not have enough information here. So guys, when you recommend these coins, just be careful. You know, it's like I would love to give you analysis, but there's just not that much you can say. So let's go lower. 4 hour. Okay, I can give you this, I guess. So off the 4 hour, this does look like continuation to the downside, which is not uncommon when you have a structure like this. Now, what I would use for that, to measure that continuation to the downside, is this trend line I'm seeing here. So this low pivot here, so this swing low level right here, connecting to this low pivot right here. All right, so let's use a ray. So we'll go from this wick to this wick, right here. Oh, nope, not right there, right here. Okay, so from $1.6750 to 1.5021 is where we're pulling this trend line out of. Okay, the reason why I would use this trend line, now I'm not saying this is going to hold as support, but what it will do is give you a visualization of a pathway down. Now we can start looking for confluence elsewhere in line with this trend line. So when a chart is this young, you have to start looking for ways to measure out measured moves. One of the easiest ways is obviously fib retracements or trend-based fib, moves, essentially. So if we're going to see more downside, okay, so if we're going to see more downside, you can reverse the fibs. So you pull down and then you just go a reversal here. So pretty much, instead of it showing a retracement to the upside, you could just pull it backwards. So let me show you how I do that. So pulling down gives you the retracement to the upside for continuation down. But let's say you're going to go lower, but you want to look for those, pulled it the wrong way. You want to look for those levels downside, to the downside. Go from this low pivot down here to this high here. So you're pulling it backwards. And now we're seeing the levels to look out for. So confluence wise, we're coming into the 123. Okay, so this is the 23.6 or 0.236, or however you want to say it. Okay, so watch for this level. Is going to be the first level of confluence with this descending trend line. And if you break this descending trend line, well, guess what? You have the levels now to watch out for. And then if you want, you can continue those extensions lower. I'm not going to go any lower, but you're looking at moves all the way down to $1 and change, to $1 at the 50. All right, and then at the 61.8 all the way down to 80 cents, and then at the 78.6 down towards 50 cents. So you now have levels to start targeting. Okay, so now let's actually start popping these on the chart. So we have right here. So we're going to get the general price areas of where to expect these prices to be. Let's put these on the blue color. That way we know it's off of the lower time frame. So it's daily or lower. Okay, so now we know general levels to watch out for if price should break down, and we can take the fib off our charts because it just makes the charts unclean. Okay, so now you have these levels to look out for, and look how this looks. So you're having a retracement down, and you're filling out most of this spike up. Okay, from the listing, you're filling out most of this spike up. Now, is there any other way to see more information from here? Let's see. So there is, okay, so we can use a different fib tool. Let's do the trend-based fib extension, okay? Now, the trend-based fib extension is what it's called. So you're getting the trend fibs to one direction. So in this case, it's going to be to the downside. So we're going to see if there's any confluence to these levels. So from this high to this low to this high right here, all right? So let's pull this down here and then here. All right, so this is going to give you continuation, the levels continuing down. And what are we seeing? We're seeing that continuation And where does it bring us? So now you're getting these zones here. So this is where using fibs can get pretty messy, but there's ways to clean it up. So using the trend fib level, we now have potential zones here, okay? We have potential zones here. So we have this zone between $1.34 to $1.26, okay? Now we have from $1.12 to $1.10, if I can do that right, or $1.09. You'll see, hopefully this makes sense when I'm done. And then from 95, we're actually not going to touch 95 because that's the median level, all right? That's the median level. And then from 79.02 to 88.6. And then we have the full 100% retracement, which we also will not add on to, all right? Now we're going to clean this up just a bit. I'll show you how. We're going to do some boxes, all right? So we're going to do some boxes. And you have a choice now if you want to keep the lines on the chart or if you want to just have the boxes. That way it's a little cleaner. I'll show you both ways. You make the decision if you're going to add this stuff to your own chart, okay? And then this is the median line we're going to keep clean. And then we're going to have right here. And there we go, all right? And now you also have the lower levels because of the trend, how the trend fib works. You can keep this on the chart if you want. These are the lower levels. The way I like to do it, unless I want to actually have the levels, I'm just going to do a larger zone right here, okay? And then we're going to do a smaller zone right here, okay? So this is how I usually chart stuff that doesn't have any data, to the left. So this is how I will chart it. And then I'm going to get rid of the lines, but here are the levels. So just make sure if you're looking at the levels, these are the levels. But I'm going to get rid of these little ray lines because I don't like how they make the chart dirty. I like clean charts, but some people can trade dirtier charts, charts that have a lot of information on it at one time. More power to you. I'm not one of those people, okay? I need charts like this that are more clean, that are a little bit easier for my eyes to take in. All right, and here we are. So now we have all this information to the downside if it should break down. And it's very important you have this information because you're looking for some sort of confluence to potentially start a position if that's what you want to do. Now, again, I'm not giving you any financial advice. You make your decisions. But this is all the information you need for now to look for any potential levels of any swing lows that will make new swing highs. So you're looking for these fib levels to hold if this spike up from the listing holds as support, and if it gets taken out, here's your next zone of fibs to start looking for if this entire spike gets taken out. Okay, so you have those levels. Now to the upside, so let's say price comes back down, holds this descending trend line. Where will it go to the upside? Well, it's a little easier on this side of the tracks because we have information to the left. So this way we can just look for fair value gaps on the 4 hour, right? So we're looking for this bearish fair value gap to get tested, to get filled, and if it does, look for all the liquidity above this swing high to get taken out. So that's why if it does break up, this level here is going to be very, very, very attractive to either short or take profits. All right, so be very careful if you look to try and take a position and hold past this level. If it gets to here, that's great. That's a great level to look to take profits and potentially even open up short if that's what you're keen to do. All right, now we have some levels above that, so we have a smaller fair value gap, bearish fair value gap right here, so a smaller one right there. All right, and beyond that we have one more right here, and I believe that's the last one my eyes can see. So right here. So we have a couple levels to the upside, we have a bunch of levels to the downside, and now the chart doesn't feel as unknown, right? Now it feels like you have a general grasp of what's happening. You are trending down, but you are coming into some interesting levels of potential support, but you need to let price prove it to you when you're dealing with air to the left. And then if you do come to the upside, you're looking at these levels to potentially play a role, but be wary if you're actually having a continuation of a trend to the upside, because this is very young. We don't know if this is going to start trending to the upside in the midterm. Then you're going to watch these highs get taken out. So as of right now, I would be looking for a breakdown and then looking for these levels to be visited and watching price interact with them. So hopefully this makes sense All right, because you are going to be watching for hook to potentially break under $1 if it should lose this descending trend line in the short term. But you have some key levels here that may play a role. So look for the median line at 95 cents to the zone here at $1. And then if it does break lower, you can go all the way down to about 55 to 50 cents. So be very, very careful if it starts breaking under 95 cents. There's a lot of room to the downside, guys. All right, everyone, that is it for hook. If you like the content, make sure to give me a subscribe, a like, maybe a share. Definitely leave a comment if you agree or disagree. If you have any questions, you can ask me there or in the Discord. I'll try to answer both platforms. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care.